All right, thank you everybody. I hope everyone got their blood sugar up. I know it's been a long couple of days, lots of thinking, lots of provocative conversations. We're going to keep the ball rolling here. We've got Eric Balchunas, Senior ETF Analyst at Bloomberg, here to talk to us about the future of ETFs and crypto. Please help me welcome Eric to the stage.
As said, I work at Bloomberg, so I'm part of the TradFi, or as they call me on Twitter, a suit. I've learned not to wear suits at these conferences, by the way, so I'm getting with the groove a little. Beautiful venue, by the way. This is Crush's financial conferences, which are usually in hotel ballrooms. So I have been getting to learn the crypto world over the last 18 months, covering ETFs. Since the BlackRock ETF filing, I've been really throwing myself into this world, and it's really incredible. Reminds me of the early days of ETFs. There's something going on, you know, that's the feeling I get. So I'm excited to share with you today some thoughts about how the ETF world is more powerful than you think, and more disruptive than you think, and probably better for price than you think. Okay, let's get this show on the road here. The ETF-ization of crypto is the name of my presentation. I'm in research, which is just one part of Bloomberg, which has 25,000 employees. So I'm like a little tiny cog in the wheel. But I cover ETFs, and this is my team. One of my analysts, Henry Jim, is here. Where is he? He's based in Europe. So if you are European and you're in the fund business, you can contact him anytime you want. And the rest are based in the US or Asia, and this is what we do all day. 15 months ago, we warned you. The boomers are coming. I realized using Paul Revere in Europe was not the smartest idea, but just know this is the guy who said the British are coming. Anyway, the point is, the ETF was a bridge between your world and the boomer world. And the boomer world's important because they have all the money. They own 70% of all the assets in the US. And they love cheap, liquid, brand name ETFs. They love them. Look at the fees on these ETFs from the spot Bitcoin ETFs. Before these babies launched, a fund would be 2%, 1.5%. Try using Coinbase. They want to charge you 1%, 2% just for the exchange rate. These are all traded at 1 basis point. So 1 basis point trading fee, almost no expense ratio. Oh, and by the way, it's issued by a very trusted brand, BlackRock Fidelity, and it's been stamped of approval by the SEC. This is the perfect situation for boomers and traditional finance to buy. And buy they did. These things took in $38 billion in their first year. That's insane. Normally a new category takes in 1 or 2 billion if they're lucky. We thought, okay, these might be due 10 to 15. 38 billion was double our high band. So hugely successful. Flows are the most important number, because it doesn't include price. It's pure net sales of the ETF. And look at that little dip. That little dip, by the way, only 5% of the people left during the tariff tantrum. So as I said last year when I was here, these boomers are going to be better hodlers than you think. They have a lot of stamina, they have a lot of discipline, and the smaller the hole, the easier to climb out of. So we're already at a high watermark of net flows rolling, 41 billion. If you add in assets, which includes the price, right? So assets is everything. $120 billion in crypto ETFs globally. The US dominates this area, but it's growing overseas. Just recently, UK announced they're going to let you trade Bitcoin ETFs. Especially as our government gets more into it, you're probably going to find some people trying to compete globally as well. But at the end of the day, nothing beats the liquidity and fees of these US ETFs. Even an institution in France, like a pension plan, would come to the US and use IBIT probably over something here. And look at this. Gold ETFs, obviously, you know they were a big hit. This is the assets historically of gold and Bitcoin ETFs. You can see how quickly the Bitcoin ETFs matched gold. Now, gold had a hell of a Q1, so its assets went up pretty good. This chart's a little old. That Bitcoin line is almost up to gold as we speak today. We think Bitcoin ETFs will probably get triple the gold ETFs in the next 3 to 5 years. Nobody's out talking about gold. I go to these things all the time. I go to TradFi events, crypto events. The energy behind Bitcoin and the wholesalers, huge. Everyone's very excited talking about it, and there's nobody talking about gold except for like Peter Schiff, okay? So the energy factor alone is massive, let alone some of the other features of Bitcoin that it has over gold. This stat is probably the most insane of all the stats from the US spot Bitcoin ETF launch, is IBIT. The BlackRock ETF is now the 23rd biggest ETF in the world. 23 out of 10,000 ETFs. And get this, I put the age of the ETFs in there. IBIT is 1.4 years old. The next youngest ETF on the list is 12.6 years old. So normally it takes you a decade to get into this elite club. IBIT did it in just a little over a year. Again, this is like crazy stuff. That's why I dedicate a lot of my time to this area, because still Bitcoin ETFs only make up 1% of all ETF assets, and I'm an ETF analyst, but I do cover it quite a bit because of this phenomenon factor. Bitcoin ETFs also have options. This is very important for institutional adoption. Options are like giving a painter 100 extra colors. You can fine-tune way better, customize exactly what you want. So options are very important, and the options market on the Bitcoin ETFs is as liquid as GLD now. So again, that was a big step as well in the institutional attraction for these funds. If you put the US spot Bitcoin ownership into Bitcoin itself, they own 1.1 million Bitcoin. So in a year, they are the biggest holder in the world as a group. Think about that, 1 year. So what's it gonna be like in 10 years? You'll probably see me more, I'm guessing. Satoshi only owns 1.1, so they own more than him or her as a group. Now, if you unbundle it, BlackRock is already second alone. Now, you've heard about Michael Saylor, obviously, buying up Bitcoin for what seems like a half a decade. BlackRock owns more Bitcoin than Saylor, again, in a year. Larry Fink filing for that Bitcoin ETF in June 2023 was massive. I'm actually working on a new book about this. To me, this was like a new hope. You know, in Star Wars, it was like FTX was still like in the air. The price was 30K. There was no narrative. And boom, out of nowhere, this BlackRock ETF gets filed. The rest is history. But not just the filing. You got Larry Fink on TV talking about this. I call this the suit coiners. Suit coiners, you like that? The suit coiners are coming in full. Larry Fink is leading them. Here's another one. This guy's from Fidelity. He's in a suit. His audience, instead of crypto, is corporate treasurers. And he's sitting there talking about, is your company generating shareholder value? Maybe you should use Bitcoin on your balance sheet. But he's speaking perfect institutional ease, boomer ease. This is where I think, when a full crypto person tries to talk to a boomer, it comes off a little crazy, no offense. This guy's speaking in their language, Sharpe ratio, Sortino ratio. Again, this is powerful stuff. You can see the people who own the Bitcoin ETFs, it's not just retail, it's advisors. Advisors have about 40 trillion of assets in America, and they are the biggest consumers of ETFs. So far, they've dabbled. I think if Bitcoin hits 150K, they will really lean in and buy more. Also, Bitcoin and some of the other altcoins fit perfectly into the modern portfolio. Most people have married Vanguard index funds. Stocks, bonds, no fee, cheap beta, I'll wait 30 years. It's a great idea, but that's boring. So they want to have a little fun with hot sauce, decorate the portfolio. To me, this is where crypto fits perfectly. And also, if you're only going 1% to 5%, you can stomach downturns a little better because it's not your whole enchilada. And so the volatility of Bitcoin is coming down because of the boomers. Look at IBIT's vol, it's about a little over double gold now. If it can get anywhere near gold, look out. You're going to get big whales biting it, like pensions and endowments and sovereign wealth funds, because they are more interested in digital gold, not a tech stock. They can get tech stock returns from NVIDIA. So if this volatility comes down and the correlation comes down, correlation is pretty good, 45%, but gold is 0. It's still less correlated than emerging markets and some other things, but you want it to be about 0. Zero correlation, a little lower vol, and I think you get a lot of bigger institutional adoption. Now, what about the other coins? I mean, they're all interesting, exciting. The blockchain, I get it. But Bitcoin is going to dominate the whole space. Right now, Bitcoin ETFs are 90% of all the crypto ETP assets. We think they'll go down to 80, but no more. So there's probably room for 10% other coins to dig into this market share. Problem is, this is Ether. Ether did okay, 10 billion, 10% of Bitcoin. Harder to explain to somebody easily what Ether does. Bitcoin's digital gold, what is Ether? I'm not going to go into it now, but you know what I mean. It's hard, it takes a while. But we've got a lot of altcoins coming. Solana's probably next. We think we'll see, we call it the altcoin ETF summer. We'll probably see Solana, Litecoin, XRP probably up next. Be interesting to see if they approve Dogecoin. But major issuers are behind these. You can see how high our approval ratings are. Obviously, the new SEC is going to be more lenient. So these are our approvals of the next big ones. These are the spot ETFs. That said, there's 80 different crypto ETFs that have been filed. So like Avalanche, Polkadot. I swear to God, like every third one I have to Google. They're really going, because if you get to the market first, you get a lot of assets. First to market is big, so they're going to try to throw stuff out here before it's even right, probably. You've also got ETFs for meme coins. Somebody filed a Trump coin ETF. Actually, Truth Social filed for a Bitcoin ETF. That's also pretty surreal. But the Trump meme coin ETF is interesting because imagine being the SEC and being like, we can't approve this dumb meme ETF, this meme coin in an ETF format. But then you're like, but wait a second, that's our boss. So if they have to approve the Trump coin, there's a Melania ETF too, don't worry. If they have to approve the Trump coin ETF, ipso facto, it's probably going to mean all of these are approved. I think they're probably going to go super liberal. We'll see where they draw the line. Again, there's so many, I had to make 2 slides here. So anyway, get ready for a lot of excitement in the next 4 to 5 months in terms of the ETF space. But we have a phrase on the team. The further away you get from BTC, the less assets there will be. These are some ways to find me, books I wrote, etc. Thank you very much for your time today.